WTF. We have a really big problem. It's nearly a $15 trillion one. But first, have a look at this pattern because it looks like a beach ball you're trying to hold underwater. We have this barrier, and then we finally get over it. I think the question is going to be whether we get volume to come in to really confirm the move because just like a beach ball you're trying to hold underwater, you can do it for a certain length of time, but at a certain point, it gets hard. And this week, we're going to find out whether we got cool man, Jerome Powell, or if we got different man. Let's have a look at here and see it, see what the news is telling us. So it's like a beach ball trying to hold underwater. And now we're going to see whether the Fed's rate cut sends already stretched valuations even higher, right? Is cool man going to come? Or are we going to get maybe something a little bit more disappointing this week? All right. That's pretty much it. Now let's talk about those big numbers, nearly 15 trillion. So here we have $6.3 trillion sitting in money market funds, but it shed about 20 billion this week. Huge number. All right. Hey, cool man. We'll come back to you a little bit later in the show. So if it's really 1995, this is going to be really interesting because we updated this pattern at 530. Now we're at 560, 568. So we're quite a bit higher. And we're going to see here looking to don't give up on the bull market yet, because at the midpoint of the year, if we're higher by more than 10%, 83% chance we're going to be higher by the end of the year, 8 or 10%. We look at the other stat, don't give up on the bull market yet, part 2. This shows us here that we have an 80% chance of being higher by either 6 or 10%. Hey, those are pretty good odds. So stretch it, stretch it, stretch it. And the bears keep crying. Bearfield rally. This is on September 20th, so quite recent. So is Jerome Powell going to tolerate these higher valuations? This will be really important because one of the key things I am watching for is basically just fear and greed. We talked about the significance of 63. Now we're back into greed. But remember, pop, flag, pop. The next pop is only really confirmed where we can go significantly higher. I'm talking like extreme greed if we manage to pop, flag, pop, and form a higher high. Right now, we're back testing the previous top here at 63. So we really have to go higher. And we will come back and look at charts a little bit later in the show. But as a quick preview here, 2 higher lows and 2 higher highs. Oops, what's going on here? 2 higher lows, 2 higher highs. Oh, that's right. I want to show the beach ball pattern, but I think people get it. And then we'll come back and look at the QQQ as well. I actually have my notes prepared right here. So we'll come back and look at these a little bit later in the show. The next thing I want to focus on here is just the pop flag. And if we're going to see greed come in, then we want to look at the heat map to see what actually drove the market in the last week. Well, it's pretty much everything. UNH, some other stocks over here like Pepsi, those are down. Nvidia's down. But some of this stuff can be explained because there was just a triple witching, right? That sounds spooky. $5.1 trillion in options expired. And that largely that played a large role. So the first number I showed you was, let's just go back to here. Hey, cool man, forgot about you. We talked about the 6.3 trillion again. So take 6.3, add on 5.1, and then add on an additional 3.5 trillion, which is going to be for the month to date, September 1st to 20th, including dark and lit pools. 3.5 trillion. Yeah, those are huge numbers. So why am I trying to show you all this? Well, because remember, Apple's worth about 3 trillion. But look here, we have these orders sorted by largest amounts. These are $26.4 billion orders. These are lit pools, which means they're in the public market. But these happened at 2 o'clock on the 20th. That's Friday. So read this headline here. This is from the 20th, and it tells us that Apple wins big as $250 billion index trade hits Wall Street. So there's a rebalancing, a quarterly one. So look, 50 billion within 1 minute, Apple gets a buy for 50 billion. Nvidia has probably a sell. So when we go back here to the heat map, you're like, oh, yes. So there's 5.1 trillion in options. There's also 3.5 trillion in dark pools, and then also all that money market fund. So what this really means is that for quite some time, let's go back here to our daily chart. Hopefully you like that beach ball analogy. So if now we go back here to a paintbrush, so right, there's this impenetrable fortress. Let's just draw it a little bit better here. A couple of squiggles. And then suddenly, right, they're trying to hold it under. So hold it under, hold it under, hold it under, hold it under, until eventually it pops out, right, like the beach ball. So now the question is going to be, what's going to happen if we back test? Are we going to form a higher low? I'll make this really simple for you when we get to the later part of the show. But if you look here, this is our previous all-time high. So if the beach ball is going to stay out of the water, we have to stay above 565.16 to be precise. Our low from Friday, it's 1 cent higher. So if we hold an inside bar or break bullish, hey, that's exactly what I want to see. Otherwise, we look to our weekly chart, which we just talked about. All right. So, hey, cool, man. We'll come back to you in 1 second here. All right. Here we go. Here we go. So, lots of big numbers. So, if now all the options are expired and we're going to push forward to the next quarter, let's see who's going to benefit. A bit of a concern right now would be that if we look at month to date, no one's really making money. The bears are making money, $500 million over on IVV. But for the most part, it's mostly red, right? That means that even though we're at all-time highs, these dark and lit pools are not paying. If it's really 1995, it's time to go mega big up. And right now, Goldman Sachs sees we could go to 6,000 by the end of the year. Ironically, this is very close to my initial target going back to the beginning of the year, where I mentioned that these are my targets, 6,200 and 5,600. So, all right, is that too much too fast? Well, some people think so. Again, Ed Yardeni is probably one of the biggest bulls. You might not know him. He's as bullish, if not more bullish than Tom Lee. He's just not as pumpy. He sees this as irrational exuberance. Again, ironically, what we talked about in the 1990s. I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up or subscribing to the channel, that would be greatly appreciated. Thank you ahead of time. He gives us the reasons why we keep going higher, and we'll just leave it there. We'll come back to that later this week. Growth is still good, but first I want to play a clip here from Jerome.
The Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. A broad set of indicators suggests that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. I do not think that anyone should look at this and say, "Oh, this is the new pace." You have to think about it in terms of the base case. Of course, what happens will happen. If the labor market were to slow unexpectedly, then we have the ability to react to that. We have greater confidence now that inflation is moving down to 2%, but at the same time, our plan is that we will be at 2%.
So that was roughly a 45-second highlight reel of Jerome Powell, and he's going to be speaking on Thursday. So this is going to be really important. And then we get inflation numbers. There's a couple of earnings this week. We got Micron and Costco, but for the most part, we're at the tail end of earnings. And remember, Goldman Sachs just said we're going to go to 6,000. So one more thing to be very mindful of is that if we're going into another 90-day cycle, what will often happen, just like we saw on Fed Day, just like we saw on the fallout of Fed Day, if the ultimate move is going to be for us to go higher, sometimes we'll get a short-term dip before we ultimately go higher, basically form like a Nike swoosh. So this part right here is where they massage the options or the positioning before ultimately they go higher. All right, so that's pretty much it. Here's the key numbers for this week. We also have notes right now, so pause the video. You can read them right here, but we're closing, I don't know, like it's close to the high of the week, so we're going to just call it there. The question is going to be whether we get above 573 to form another weekly higher high and a new all-time high. All right, and then same thing for QQQ here. We're looking for that. Just a reminder, on Thursday and Friday, how we close the week out, again, above or below 573 and 487 is going to be really dictated by either Cool Man or Hawkish Man. So Jerome Powell sounded really good there, less than 1 minute. What does that really mean? We talked about 1995. What could that really mean for the market here? We talked about the beach ball. There we go. And now if we come back to the charts here, if we think about what Jerome Powell is going to be telling us, I think I have a few more notes here really fast. So we talked about that. If you want to be cool, man, right? I made some jokes about this week. If you are on a motorcycle and you plan to ride and don't have shoes or pants on or a helmet, what could happen? You might get a little bit burned. So be mindful of the risk right now. If the beach ball falls back underneath or the all-time high, yes, I understand that history does not repeat itself every time, but that's the point. It's still close enough. On a closing basis, if we fall back below the previous all-time high, I wouldn't need this pattern to tell me we're bearish. Why? I just go here to my monthly chart. It would just turn into a fail break. And on a fail break, we do not get blindly bullish. Why? Because we respect things like, let me just see here if I can do this really fast. Should have probably thought about this before, but hey, I'm winging it. Sometimes you got to wing it right here. Why? We go from being on the gas to hovering over the brake. That means we got to be cautious. If we're over 564, hey, pedal to the metal, baby. Let's go. But we're only at 568. And look here to QQQ. We're only sitting here at 482, which tells me that no, QQQ is not in let's go, right? Full tilt, full time. It briefly got above 486, but it's not currently above there. It's currently got a yellow light. Got to be cautious. All right, rounding the video out. If you're still watching, there is a link to these resources in the description, and I would encourage you to go click on there if you want to read more. All right, so yeah, sometimes you can get burned, even hurt yourself, and this might still happen. Let's see where we are on Thursday, Friday. If we're going to go to infinity and beyond, I'm talking 600 or 6,000 SPY, we got to make it to 574 first. Remember, the only thing that's for sure is that nothing's for sure. So what is Jerome Powell going to say this week? Well, he's speaking with everybody in public from the FOMC, basically. So are we going to go higher? Well, that's the big question. We talked about what could happen. We went from neutral. Now we got our pop flag, right? We got the pop. Just got to make the higher high and hold it now. Just got to keep advancing. Jumbo cuts from the Bank of Canada and a jumbo cut from the Fed. And it appears like AI is still very alive. $150 billion valuation for OpenAI, $5 billion basically line of credit, and then $6.5 billion in equity with all the big players in here. So the demand is so great and everyone wants to be first, as Jensen Huang told us recently. So that beach ball's popping out. And OpenAI's new model called OI, or Strawberry, hey, human-like reasoning. This is going to be fairly interesting as we watch the future, can handle complicated math and coding problems. All right, what's going to happen there? And then we get some chip wars, China chip IPOs. This is for Biren, ironically, a company that was more advanced than NVIDIA, like 2 years ago. So I believe, I don't know for sure, but I think we're about here. Apple just launched a phone that doesn't even have the software for it. So I don't even know if we're in early adopters yet. I would believe we're about right here. The hardware you can buy now will eventually have those software applications later this year, next year. So I think we're about right here. And valuations are going to get bigger. Remember, these big companies like Apple, Microsoft, these are $1 trillion companies, right? Trillion. So 3.25 trillion. Even though OpenAI is valued at 150 billion, which is huge, right? It's huge. It's not really as big as these other companies. It's 150 billion. There's tons of room to grow. It could 10x. It could 20x. So that's it for today's video. Click the video on the left or come hang out with me at 9:15 on Monday. Thanks so much.